Hey traders, it's Joe here. Happy Monday, and I'm going to do a quick, very brief closing read from a very uneventful quad witching Friday, and I'm going to do a quick pre-market analysis so we can forecast today's price action. So we can see on Friday, tension went all the way down, it crossed zero, but price remained stabilized except for the last 15 minutes, which I'm just going to chalk up to rebalancing and some quad witching shenanigans. With that said, we are still bullish. The daily tension line is still bullish, and that's the histogram here. And we're going to have a gap up. And that gap up is going to put tension back above zero because the market internals are going to be strong enough, and most likely what's going to happen is tension is going to close above zero unless the bears get motivated. Now with tension below zero like this, it does give the bears a very good opportunity, but the bears aren't here, so I'm not going to expect them to be here, and they've actually gave no indication that they're sneakily getting in or they're trying to change the trend, especially Thursday and Friday. So as I've always said, I trade with the winning team because you'll get a situation like this where price just melts up, and if you try and counter trend trade, unless you know you're counter trend trading, you're going to get stopped out and you're going to get really frustrated, start calling the market manipulated and all that sort of thing. So I don't expect the bears to be here. I expect the bulls to show up yet again. So there wasn't really anything significant on a micro level Friday, so there's nothing really to show there. But I also believe that the bulls are going to be not very motivated. So it's not enough to be a good trader just to know the trend. You also have to figure out the motivation. And what I mean by that is you can tell that the bulls are in these positions. They have great positions. They don't have to be eager, because if you had a $500 million account, why would you eagerly buy price up here when you have positions down here? So at this point, it's just coming down to FOMO bulls that might want to add at the top, but most likely they're going to let price slide around, shop around, and you're just not going to be ultra eager to buy. And we saw that in full force on Thursday, where we had a large gap up at 29.60, and we almost had a 30-point gap. Oh, sorry, it's 30-point run down until the bulls came in and bought the bearish idea. So with that said, I am bullish. I will be looking to buy with the bulls, but I am going to be very uneager because large equity players, the ones who actually move the market, the ones who are not buying on margin, they're the ones that are going to be not very eager either, because they haven't been, and you can tell. So I'm going to trade with them. Typically when you're able to model the large equity traders and their motivation of when they get in, those are by far and large the best trades. So the other thing I'm going to look for, okay, this is, look, the market can do whatever it wants. I am going to look for if tension starts going up and the bears say, you know what, this is a good idea to try to get the foot in the door, let's short, and, the price starts going down, tension starts going down with it, and it goes down far enough where they can establish a bearish trend. I don't expect it to happen, but that's exactly what it would look like if I'm wrong. So you have to be prepared for anything in the market if you ever want to be consistent, because the market at some point will it's going to change its trend mentality, and you have to be ready to change with it, or else you're just going to lose. So, all right, everybody, I will see you later. I will talk to you in the room. Good luck trading.